Welcome back, my awesome people. Today, I am honored to have Christian Magoon two times on this channel. Now, Christian is the founder and CEO of Amplify ETFs. Now, in the first interview, amazing wisdom. I know a lot of you jumped into Amplify ETFs, especially the crypto ETFs. They have been breaking ground. And this is why I had to have Christian back on, because they're doing some amazing, amazing things. And if you have not checked out our first interview, please check it out, because it was awesome. So just to give a little background on Christian. So Christian, he is the most influential figure in the ETF industry with a career spanning over 2 decades. And he has launched over 70 different types of ETFs from different sectors, very thematic, very commodity based. Anything that could possibly be an ETF, he has probably done it. And not only that, but he has grown Amplify to over $16 billion. So as I said last time, Christian is the man to go to when it comes to ETFs. Christian, how are you doing today?
Jacob, thanks, man. I feel like you're a member of my family. That's such a great introduction. I appreciate all the kind words, and just happy to be back on your channel. Congrats on the success you're having. It's awesome seeing the amount of views that you have across so many different videos, and happy to be on exclusively here with you to talk about a bunch of topics today.
You know what? I have been looking at the page, looking at the growth, and I've wanted to get you on so fast. And I'm so happy we're here today, because we're going to talk about SOLM. For those of you that have not checked out Amplify ETFs, go check them out. You'll see SOLM. We're going to look at an XRP ETF. We're going to look at a Solana, Ethereum, Bitcoin, and the biggest news of probably this year is silver, the mining industry. I'm sure my audience has seen the SILJ behind you. SILJ is one of their best performing ETFs in the silver industry. And as you know, my friends, silver is hitting all-time highs, just like gold has been hitting all-time highs. So metals, they're not going away. So Christian, let's get right into it. So for those that did not watch our previous interview, can you tell us about yourself, your journey, and what first inspired you to found Amplify ETFs?
Yeah, so good question, Jacob. I'm an ETF guy for about 20 years now, and I've been launching a variety of ETFs. And most recently, over the last 10 years at my firm, Amplify ETFs, we've been kind of first movers in a lot of areas. We launched the first blockchain ETF, BLOK, in 2018, the first online retail ETF. We have the first cybersecurity ETF. We have the first video game ETF, which is actually the best performing video game ETF gamer this year in the industry. We have the only junior silver miners ETF. And then most recently, what we've talked about is we went into the crypto token space and launched a variety of ETFs that allow you to have exposure to Bitcoin, Ethereum, Solana, Ripple, but then actually get some option income along the way. So the traditional way you invest in crypto is price has to go up. That's the only way you make money. In these ETFs, you don't have to worry about price just going up, because you get option income every month. So we've been in a downward market or a sideways moving market. You've been able to make money monthly in these types of ETFs that we'll talk about today. And that's kind of our latest innovation, our covered call ETFs in the crypto space, and just continue to do a lot of things to try to innovate and provide investors new tools in the ETF format that are very easy to use and generally lower cost than maybe doing these types of strategies on your own.
You know, the best thing is that the traditional method of investing is kind of slowing down. And this new method of investing is the ETF world, where you can have exposure to multiple asset classes, multiple sectors. But the beautiful part is now you can partner ETFs with option strategies. And that is where the yield comes in, because before, I mean, Apple doesn't really have a dividend or distribution. Microsoft really doesn't. If it does, it's so low. But now when you add in the options, especially even crypto doesn't give out unless you're staking. But when you have that options opportunity, you are able to gather that income distribution. And so you did mention a few of the ETFs that Amplify already owns, but just a couple that I want to just mention out there. BAGY, that is exposure to Bitcoin. EHY, which is the Ethereum exposure. And of course, XRP ETF, XRPM, which obviously exposes you to XRP. But today, of course, we'll be focusing on the latest crypto ETF, SOLM, which tracks Solana. Now, Solana, of course, is I guess the new player in town, right after Bitcoin and Ethereum, as everyone says, it's usually in the top three. Can you tell us about SOLM, your Solana 3% monthly income ETF, and what was the original vision behind creating it?
Yeah, so when you look at Solana, it has been in the news because it is a utility coin, not unlike Ethereum. And there are some people who think that Solana could displace Ethereum or certainly compete heavily with Ethereum because of how quick the transactions happen on Solana and maybe the relatively low cost that's there. So Solana has a lot of like ardent supporters and certainly will be, along with Ethereum, kind of the guardrails of which stablecoins will be built on. And the stablecoin opportunity in 2006, we think, is going to be massive. So as more stablecoin transactions happen, that means Ethereum and Solana price should rise. So a big opportunity there. And we looked at doing something in Solana, and we saw other companies that were launching spot Solana ETFs. And, some of them that were even doing spot Solana ETFs that offered staking rewards or kind of a yield, so to speak, of, around 7 to 8%. And we said, boy, we want to bring something new. So how do we do that? Well, what if we bring a Solana ETF that weekly writes options on Solana so that it produces 3% monthly income, or 36% a year. 36% a year of income dwarfs what you can get from staking, that 7 or 8%. And that's income that happens regardless if price goes up or goes down. Each month we're distributing 3% yield from options. So what simply happens is the portfolio manager inside our ETF, SOLM, is writing options on a weekly basis to accrue 3% per month. That's paid out at the end of each month to shareholders. So you get some downside to that. I will say, and the downside is you don't get the full upside of Solana because you are writing these options. So you're going to get maybe 50 to 65% of the upside or the price appreciation of Solana. Because you have that kind of cap, that's why you're receiving the 3% monthly income. So at the end of the day, over the course of the year, what would your total return be in the Solana option ETF, SOLM, that we offer? Should be somewhere to be about 50 to 60% of the upside of Solana, plus that 36% yield. Now, if Solana goes down, you get 100% of the downside of Solana. However, that's cushioned by that yield that you get as well. So there's a little bit of hedge. So what I like to say is this is a way to invest in Solana and have a little less volatility. Yes, a little less volatility to the upside, but you also have a little less volatility to the downside. And with all this FUD that's happened this fall, that's sometimes not a bad thing. So it's a little bit more measured way to invest in a lot of the upside of Solana, but also have some returns coming in every month that may be helpful for many investors as they're maybe doing other things like paying bills or dollar cost averaging into other ETFs. So we think it's a very unique product, and it's priced at 75 basis points, less than most Bitcoin ETFs, for example, that maybe are option income that are at 90, 95 basis points, even though this is kind of a more tricky asset to go out and write options on. So we think it's very competitive. SOLM is the ticker, pays out monthly, and something we just launched this fall we're excited about.
I think you're absolutely correct on that, because the past, couple years, yes, we've had spikes, but then they always kind of come down a little bit back to earth, especially with crypto. That's how volatile it is. And when it comes to even Ethereum and Bitcoin, they just got recently their ETFs at the beginning of last year. And this year, I'm glad to see, more coins getting ETFs, because this is the future. Like, there's no escaping it. And of course, with the 36% yield, I think a lot of people will be happy just to kind of park their money and just kind of return or get their return. That's what I've been doing when it comes to a lot of crypto ETFs, where there is some options there. I've just been kind of riding the wave. I'm not even looking at price anymore unless there's a massive dip and I buy more. So when it comes to regulations and scrutiny, of course, crypto has a lot of regulatory, I guess, conversations. How were you able to pass SOLM as a regulation approved ETF, especially when it's a crypto ETF?
Yeah, so there's been a lot of good progress here in the US about certain tokens being able to be put in 40 Act investment products like ETFs, that ours are traded in this case on the New York Stock Exchange. So certain coins, whether that's Bitcoin, Ethereum, Solana, Ripple now, there's some others that also have passed kind of this test on whether it can actually fit into a 40 Act product. So once we knew that that was available to, those coins were available to produce product in, we've launched basically into almost every coin. So there's a few coins out there still that we haven't launched product in, but we're monitoring them. As you know, the crypto marketplace is very top heavy from a market capitalization perspective. So we're keeping an eye on it. We have, a fair amount of market cap covered when you look at Bitcoin, Ethereum, Solana, and then Ripple comprises, I think, well over 80% of the current market cap of the crypto space. So we're going to continue to look at other coins because more use cases are certainly emerging. And as we see stable coins as well as tokenization come more to the forefront in 2026, I think that's going to be great for some other coins, particularly L2s, coins that are built on, Ethereum or Solana. So we're keeping a close eye on that. And actually, we're going to be launching a couple more products that aren't covered call products, but will take advantage of stable coins as well as tokenization. Those will be out hopefully in the next month or so.
Tokenization is the future. There's so many people like Larry Fink and JP Morgan. Pretty much all the big banks are now starting to kind of warm up to the tokenization world. So could we just ask this one question that most people probably are thinking? Why would I buy a SOLM ETF with a 36% yield compared to buying Solana, the coin itself, and maybe staking it? You did mention it's about 7-8%. What do you think, in your opinion, if you were unbiased, what is the differences, the pros and cons maybe?
Yeah, so I think I'm buying spot Solana or spot Solana ETF if I don't really care about kind of the short-term price gyrations that I'm just looking at maybe over the next 2 to 3 years. I know the price is going to be dramatically higher, and I'm not going to get myself in a position where in a downward move on a bunch of FUD, I'm going to liquidate and feel like I need to get out and try to time the market. I'm just a long-term holder. Volatility doesn't bother me. I think that's where the spot Solana ETF or just spot Solana makes a lot of sense. If you're a little bit more concerned about kind of mitigating some of that volatility, having a little less highs, a little less lows, and a smoother ride, and that's better for your psyche or you not selling at the wrong time, I think this is where these crypto option income ETFs like SOLM make sense. Also, you may have a big stack of Solana. And yeah, you're getting 8%, maybe staking rewards from it, but it's not paying the bills. You could move some of that stack into SOLM that's yielding 36%, 4.5 times more. And that may actually help pay your monthly bills. Or it might be a way for you to say, you know what, I know Solana is going to have some ups and downs over time. I'm going to take some of my Solana stack, put it in SOLM. I know I'm getting 36% yield from that. What I'm going to do with that yield is I'm going to wait and reinvest it when spot Sol is in a dip. So I'll have some dry powder to buy Sol when it drops, because we know the volatility exists there. Many crypto investors, the dip comes and the FUD comes and they say, I wish I had more to deploy from my bags at these low prices. Well, if you have SOLM, you're always going to have more every single month to deploy. And that may help you take advantage of some of the dips that are in Solana, and therefore give you kind of a better way of buying low, so to speak, on the Solana or any crypto price action. So a variety of different ways to kind of incorporate it. Again, maybe it's because of income, maybe because of dollar cost averaging opportunities, maybe because you want less volatility and you're trying to, keep a little bit of a ring around not selling in a dip. So those would be, I think, the ways. But no question, if you don't care about volatility, if you really don't want income, if you're not looking to kind of deploy more money when there's dips, you should buy the straight Solana ETF or maybe just buy spot Solana, because there's really no advantage then of having the income for that investor.
You know what? Very well said, because that's exactly my thinking when I decided not to buy the actual coins and instead buy the ETFs with a covered call options back. Because the last dip, I didn't have to spend any of my money. It was pretty much just, using my distributions and buying more. And I think you're absolutely correct, especially with such a volatile coin. And also, you're not really going to sell the coin until maybe 10, 15 years. So why not for 10, 15 years get an appreciation, plus at the same time get a distribution that is monthly? You pay your bills. You don't have to worry about, especially in this economic wave that we're currently in, where people are getting laid off left, right, and center. And I'm sure so many people have thousands of dollars in the coin and are having panic attacks every other day when they see the fluctuation. Instead, they could have just rode the wave and just received their distribution. And so, what type of reaction have you received of SOLM? Is it since launch? Is it more from institutions, more retail investors? Are they more excited about the yield, more excited about depreciation or speculation? What was the feedback?
Yeah. So what's interesting is this is one of the areas where retail investors have an edge over institutions, because many institutions, they need to see a product be out for a year. They might have to get permissions from a home office to even invest in the product or even the cryptocurrency. And as we know, Solana, still isn't really in the mainstream. Bitcoin is just becoming in the mainstream in the institutional and financial professional side. Ethereum is next, and then Solana is as a distant third. So a lot of our conversations are really with existing Solana investors who see this as a great alternative to staking rewards, where they can get a lot more income potential than that 7 or 8% of staking. Second, there's a fair amount of people who do own Solana who never really owned Solana in their brokerage accounts before. And they compared maybe the spot Solana ETF and the option income ETF and are doing a blend so that they have some spot ETF exposure, but then also some income exposure. Many of them, again, are trying to kind of accumulate some of these distributions to then be able to buy in a dip. And we've kind of been in a dip the last 60 days or so since the ETF has been out. So the feedback has been great. And frankly, we've had to talk to people from an educational standpoint in the financial professional area more about Solana in terms of education than we did when we launched our Bitcoin ETFs and our Ethereum ETFs. So Anthony Scaramucci is about to put out a book on Solana. From Skybridge Capital, influential investor, big time into Bitcoin early on, and wrote a Bitcoin book. I think it's now 7 years ago that became very popular, and is about to launch a Solana book. And, as a hedge fund manager, Mr. Scaramucci is pretty influential. So I think better times are coming for Solana, just from a visibility and education standpoint. And no question, unlike Bitcoin, I think Ethereum and Solana have a path to potentially larger upside over the next, say, 6 months. I think Bitcoin is more of a store of value, right? So we need more liquidity, interest rates to go down, et cetera, for Bitcoin to really move. On the other side, well, Ethereum and Solana benefit from that. Their utility also helps them, and the fact that they're going to be the underlying rails for stablecoin transactions, and stablecoin transactions are going to be ramping up significantly here in the next 6 months. That activity could actually start to propel Ethereum and Solana, maybe some of the other L2s, upward before you see Bitcoin rebound. So we're keeping an eye on that simply because that, again, utility is a big deal. Bitcoin doesn't really have a utility, right? We're not necessarily using Bitcoin to buy and sell things. Banks aren't using Bitcoin as the underlying blockchain to create, stable coins off of. Instead, it's Ethereum and Solana. And that activity could really, I think, be a leading indicator and maybe free those coins up a little bit from the overall macro story of crypto, which has been kind of dictated by Bitcoin as a store of value alternative to gold.
Yeah, no, I mean, perfectly said, because Solana, when that book comes out, I think it will definitely propel it. But not only that, I think a few months ago, like maybe 2 months ago, Western Union just now declared that they're going to have most of their payments through the Solana blockchain. And I think that's when I started, okay, let me look into Solana a little bit
Yeah.
harder and deeper. But it's amazing where you can see crypto coins fluctuating in where they stand. And I think at this point, it does come down to the top three: Bitcoin, Ethereum, and Solana, because as you said, Bitcoin is more of a store of value, which I do believe in that because it really doesn't have much utility. But Ethereum and Solana are now being, commercially used, mainstream used, personally used. So I think those are definitely going to make waves in 2026. So I have to ask every ETF person that has a yield, how safe is the yield? Is there any reason to suspend the distribution if there's like maybe a market crash, regulatory changes? How safe is SOLM's yield?
Well, so the way SOLM obtains its yield is it simply writes options on the SOL exposure it has through ETPs or derivatives on Solana. So the issue would be when you're creating option income for any type of asset, whether it's stocks or crypto, is that there needs to be volatility in that asset. And we're targeting 3% a month or 36% a year. So one risk that could happen is if Solana basically had no price volatility in it. Now, Solana is more volatile than Bitcoin, number one.
It is.
Bitcoin's 4 times more volatile than the S&P. So I think it's worth saying that that's a risk, but we'd have to see some unbelievable things in the marketplace. I think there's always going to be volatility type option trades to be done in Solana. We're again targeting 3% a month, and on average, we're covering about 50% of the portfolio of our Solana portfolio. So when markets become more volatile, we have to cover less of the Solana portfolio because we get that 3% more easily because there's just more option income. When markets become less volatile, we'd have to cover more Solana exposure. So we're not even close to covering half the portfolio to generate 3%. So and that kind of 50% coverage of 3% is based on looking over the last I think almost 5 years of data on Solana. So I don't think there's a huge concern about being able to generate that 3% income. Again, we could, entirely cover the portfolio, meaning we have 50% more capacity to get that 3%. And again, to do that right now, we're only at 50%. So I think it's something that is very sustainable. And, that's why we chose that 3%. We felt like there was enough kind of safety around that 3%. Creating that 3% yield with only covering 50% of the portfolio, because we have seen stretches where at least Bitcoin has decreased in volatility. Actually, had a fairly low volatility versus the S&P up until October 10th. And then we had that massive sell off on October 10th. And since then, Bitcoin volatility and crypto volatility has crept back up. So I think we're pretty secure in being able to produce that yield. And good news is you can see it every month. Every month we, push out the yield, distribute the yield. And, it's again, that 3% based off kind of the fund's assets under management. So you can never say never in a regulated product. There's always a risk, right? In any type of investment. Our product's not FDIC insured or anything like that. But again, we feel comfortable in the way we create that yield and the underlying asset, and the fact that we're, again, only having to cover about 50% of the portfolio to generate that 3% monthly.
Well, my audience definitely love to hear that, because just like any stock, right? Any stock that pays a dividend. I remember a couple years ago, my heart broke when AT&T had to slash their their distribution from, I think, 7% down to 4. But they're coming back up. Team AT&T. But I think with any company, right, it's all about the market. It's all about really, really, really extreme cases where the distribution may have to, get slashed or get paused or anything like that. But thank you for that, because I think a lot of people, when they see double digits, whether it's 10%, 20%, 30%, they're wondering, okay, something has to give. And the best part is it's an options call. You're not relying on shareholders. You're relying on, the geniuses behind the computers making the move. moves, which is awesome.
Yeah,
So yeah.
and I would just add, Jacob, that the one unique thing is, for investors, most of the time they view volatility as a bad thing, right? Oh no, the market's volatile now, and I'm seeing, a bunch of lows or a bunch of, highs or back and forth. With option income strategies, volatility is your friend. So the more markets are volatile, the better it is for option income products. So it's the one area where usually market volatility ends up being a bad thing for investors, but option income ETFs harness volatility to benefit you by creating more option income. Or in the case of the 3%, you have to now cover less of the portfolio, meaning you have more upside in the underlying asset. So volatility is your friend when it comes to option income, and that's something for people to, I think, maybe think about, given all the volatility we've seen since October 10th.
You know what? Thank you for adding that point because a lot of people are scared of volatility, right? Like yesterday we were up a lot. Now today we're down a lot. So people are frantic. So thank you for adding that because volatility is an options or even traders' best friend because they're able to calculate and do a lot of things more than a sideways market or just a downturn market or just an uptrend. So when that up and down Bart Simpson comes around, I think that's where people are making their money. Okay, so let's take a little pause from Solana and let's talk about some other really amazing ETFs that Amplify ETFs have. For example, if I don't ask this, the XRP army will call me out. You
Yeah,
have an XRP ETF, XRPM, which is similar to the Solana one.
yeah,
It is a 3% monthly premium income.
that's right.
Can you tell us about that ETF as well?
Yeah, so that's constructed just like our SOLM ETF. We're going out and writing options on XRP, and seeking to distribute 3% a month or 36% a year. And I got to tell you, we've launched Bitcoin, Ethereum, Solana. The most passionate community we have seen is the XRP army. They have really come in force in not only in our ETF XRPM, but also the spot XRP ETF. Just seen some very strong interest there, and it's cool to be part of that community. We are a crypto friendly ETF provider. Been again in crypto since 2018, and it's fun to be part now of this XRP community with XRPM. And I think there's a lot of promise there. I mean, that's another coin that looks promising for payments and fund transfers. And one of the biggest industries in the world is the payments industry. If you think about all the payments that are happening constantly, and some of the less than ideal scenarios of fee paying through companies like Visa or MasterCard or American Express or even Western Union, you can see why, having a crypto solution that's often faster and less costly benefits everybody, merchants and consumers. Believe it or not, we're now even seeing Visa start to use stablecoins. About 25% of their transactions were on the blockchain 2 quarters ago. So this is all starting to kind of converge, the traditional financial services and payment industry with stable coins, and specifically some of these coins like XRP. And I think XRP is always focused in that payment area, and certainly could be something quite interesting to watch here. And again, we have a way to kind of own XRP and participate in a fair amount of the upside, but in addition, get a yield of hopefully, or at least we're targeting 3% a month or 36% a year. So excited to be part of that community.
No, I mean, I have not been part of the community yet. I have not bought any XRP, but I have been watching it for a while because it shot up so much in such a short amount of time, and they have such a great community as well. I mean, the XRP army, please do not mess with them. They they will come after you. And there's also another ETF that you have. This is gonna be the last ETF I talk about from the crypto side, but EHY. So EHY is the
Yeah,
underlying is the Ethereum base.
yeah,
However, you're going for a 50 to 80% yield. Can
yeah.
you tell me how that works? Because I'm also highly interested in that one.
Yeah. So, we've talked about these targeted income products where we're targeting 3% or, 2% in the course of our Bitcoin So, we know that some people may really want a lot more income potential. And for that, they're willing to limit more of their upside. So it could be just a stage of life they're in, or maybe they have a big stack already of pure play Ethereum exposure and really want a lot more, income or yield potential. So we have a couple crypto ETFs. EHY is our kind of our max income ETF on Ethereum that are more aggressive, and instead of covering a portion of the portfolio, cover the entire portfolio each week. And what that gives you is a little less upside. You get about 5 or 10% max capital appreciation each week in Ethereum. For that, because the portfolio, so let me back up here. How does that happen? Well, each week we're writing Ethereum options that are either somewhere between 5 to 10% out of the money. So that simply means that our position can go up somewhere between 5 or 10% in that week and participate in 5 or 10% of returns in Ethereum. But once Ethereum goes above 10% return, say to 11%, you don't participate in 11, 12, 13, 14% returns in that given week. So we're writing on EHY weekly options, generally 5 to 10% out of the money. It's not always the same. And for that, you have 5 to 10% weekly upside. What we will expect to generate is 50 to 80% yield over a given year. So the yield each month will fluctuate because we don't know what the volatility is going to be like in Ethereum, but we think over the course of a year, we'll be able to generate 50 to 80% income stream from that options. And then in addition, you'll have somewhere between 5 to 10% upside each week in Ethereum. So kind of a unique strategy, and actually has done quite well relative to maybe having less income, just because Ethereum has been kind of more in a downward moving market. So this is for somebody who I guess wants more of their total return when they look at Ethereum from income than they do from upside exposure. All of these products, where they work the worst is if Ethereum or Bitcoin or Solana is going straight up. Any option strategy that you have in an asset where the market's going straight up, whether that's the S&P, NASDAQ, Bitcoin, or Solana, that's the worst market for them. The best market for them is probably a sideways market. And then the kind of the next best market is a downward moving market, because that option income gives you some cushion against the price depreciation of the asset. So somebody could use EHY as like a complement to their existing Ethereum exposure, maybe be a little less price sensitive. My guess is we're going to see more people jump in if we hit new all-time highs on Ethereum. We have a high income or max income version on the Bitcoin product as well. Like this, tactically may be a great move for somebody who's like, hey, I think the top is in for the short term of a Bitcoin or Ethereum move. I'm going to buy the max income product to cushion, a potential decline, or maybe or make a little bit of more return on a plateau type market or a sideways moving market. So these are all really interesting tools, and I think they can be used as great complements to spot Ethereum or Bitcoin or XRP or Solana exposure, or just spot ETF exposure. When you look at Ethereum, you can buy the spot Ethereum ETF, but unlike the spot Solana ETF, the spot Ethereum right now doesn't have any staking rewards. And if it did, it might be maybe 3% staking rewards. And by the way, I think the staking rewards, at least on the Solana product, they're not paid as a dividend. They actually are just factored into the overall NAV. So you don't get a distribution each month, for example, because the ETF is staking. So there's a few things you just need to be aware of when you start to look at these ETFs, and especially if you're looking for income. Don't get fooled by somebody advertising a 7 or 8% staking reward, because that's true. There is that reward, but that might just turn out to be 7 or 8% over the course of the year that accrues to the NAV of the fund, not a monthly or quarterly or an annual income distribution. So just be aware and read the fine print on some of these ETFs.
No, I've actually looked into that, and a lot of, yeah, you're absolutely correct. The staking, they don't give you a distribution. It's just trying to create a higher appreciation.
Yeah.
And I mean, if you're an appreciative person, then okay, that's cool. But I'm a
Yeah.
distributive person. I love my distributions, and so when it comes to crypto, a lot of people, they're scared, and that's okay. And I think when it comes to ETFs, of course, you can put it in your, tax haven accounts as well, which is, I think, is a totally a bonus. Now looking at outside of crypto, one of your amazing ETFs, breakthrough ETFs, I mean, metals. Silver has all-time highs, gold has
Yeah.
all-time highs this year, but SILJ, the ticker symbol behind you. Can you tell us more about that?
Yeah, so silver, gold's been in the news as kind of a headline moving asset, and gold and silver really have been moving for a lot of the same reasons that crypto has been moving over the last few years, and really kind of a store of value trade. Silver, believe it or not, just silver coins, silver bars, silver itself is up 93% in price this year. So it's been a great performing hard asset. We have a fund that invests in the mining companies of silver, and these are the small to mid cap mining companies, so-called the junior mining companies. And whenever you're looking at a mining ETF, whether it's copper or gold, silver, you have to understand that they're a leverage play on the metal price. So these mining companies will go down more than the metal in a bear market, but they'll also go up more than the metal in a bull market. And because silver has been in a bull market, our SILJ has delivered a 158% return as of last
Ooh.
night versus silver at 93%. So it's been a great kind of alpha provider. I think it's one of the top 10 performing ETFs that's non-leveraged in the United States this year. And silver is interesting because it does have the store of value demand like gold does, but the other part, and this is kind of where I think your audience especially gets it, is the industrial demand that silver has that gold really doesn't. And what's the industrial demand? It's for data centers, solar panels, electric vehicles, and batteries. Silver is the most conductive metal when it comes to electricity. So all of those areas that I just mentioned is a big time consumer of silver. And we're now 4 years into a supply demand imbalance. There's way more demand for silver than there is supply. So like gold, people want to own silver as a store of value. But unlike gold, there's also this really strong industrial demand, and something that kind of is next generation when you think about what the uses are for silver. So we think silver still has quite a ways to run, and we think it could be up another 30 to 40% next year, the price of silver. If that's the case, we would see a leveraged return above and beyond that in our SILJ ETF. So we think the future is really bright for silver. We also are very positive of gold, for gold, by the way, as well as the crypto space. But it's hard to ignore when Bitcoin is down, as we talk about, 1 to 2% this year, and we see silver up 93%, and then have an equity version of silver, again, these junior mining companies that are up 158% this year. So a neat alpha play for people to take a look at. It's hard to believe that we're in an age where digital assets can offer value, but then rocks that are shiny, silver, or the companies that mine them, can also be an alpha provider. So something for your audience to take a look at, we think.
It's kind of like the battle of the old school and the new school, right?
Yeah.
It's amazing because I would not have thought 2025 was going to be the year of silver or gold. I would have thought, crypto for sure, AI, tech, but they're taking the hit, and then the natural ones are kind of skyrocketing. And I think when it comes to silver, a lot of people are also waking up to the idea that silver is not just a store of value. As you said, it's actually a utility. You can actually use it for technology, for medicine, healthcare, so many
Yeah.
attributes that it has. Sometimes, people say, Bitcoin's gold and silver's Ethereum. I kind of believe that a little bit because it's kind of like that second sibling, right? You don't know what they're up to. That they're wild. um, So when it comes to the future, we're gonna get back to Solana a little bit, but looking towards 2026, I know so many people are talking about a recession, macroeconomics, microeconomics. What are your thoughts on 2026?
I think we're pretty bullish on 2026. I mean, there is some bad, kind of consumer sentiment or confidence out there right now, that the consumer is, concerned about inflation. They're concerned about higher interest rates, maybe home values. With that being said, when you look at unemployment, we just had a recent unemployment report that was a 2-year low in terms of unemployment, meaning it's a very good job market out there. In addition, we think that the interest rates will be cut one way or the other. We've got a stubborn Federal Reserve chair who hasn't really cut rates that much, and that Chairman Powell will be replaced by May of next year, and likely we'll hear, I think, before year end, kind of who that nominee is going to be from the Trump administration. And they've talked about reducing rates substantially, which we think that new chairman would likely do. More liquidity in the system is very good for risk on assets. It's great for stocks. Should be good for crypto, good for hard assets like gold and silver, and actually should be good for the bond market. So looking into 2026, we think there's some good things coming. Now, historically, we're in kind of a weird election cycle year, and we could see kind of a tough first part of 2026. We think maybe a more volatile first half of 2026, and then a much better second half in 2026. That just kind of lines up historically with the US election cycle. On top of it, we think, again, we'd have a new Fed chair by May of this coming year in 2026. So there's a few things that line up that seem to think that maybe the back half of 2026 could be a good kind of time for all of those investments mentioned. With that being said, I'll just say, looking at the crypto space, October 10th was a really steep sell-off, and a lot of money was lost. A lot of market cap evaporated in crypto. And it kind of reminds me of the SBF sell-off that happened several years ago. In fact, I think it was larger than in terms of market cap, just because the market is bigger now. And it took the market 6 to 8 weeks after SBF, the whole controversy happened there, to recover. And we're getting close to that 7 week period here post October 10th, where maybe some of that sell-off starts to stop, and maybe instead of selling, we start to see more buying. So we're actually, I would say, lean towards the bottom being closer at hand in Bitcoin and Ethereum specifically than it was over the last few weeks. And I wouldn't be surprised to see Bitcoin rally here a fair amount in the next several months going into January and February. And, I wouldn't be surprised again. I mean, this is maybe a little too bold, but I think Bitcoin could hit all-time highs or get back to all-time highs in the first quarter of 2026. I think that's a leading asset. So if the market is going to sense kind of a change in liquidity from the Federal Reserve coming in May, the market's always forward-looking, so it tends to move before the actual event happens. Bitcoin is even more forward-looking. Crypto's more forward-looking than the equity markets. So that's why I think we could see Bitcoin kind of have a run, maybe even Ethereum too, at all-time highs in the first quarter of 2026. A little bold right now, given where we are probably in terms of the drawdown. Probably a 40% drawdown from highs, but I think you could make a case that we could see that. So I guess we would say, we're pretty bullish, noting that there could be more volatility in the first half of next year, but we think it could be another good year. What could upset that? There's enough geopolitical risks, as a war, a hot conflict in Europe, something happening in Taiwan. I think those are probably the biggest kind of black swan type events I could think of. And on the other side, it seems like there's going to be some very pro legislation for crypto. The Clarity Act looks like it's coming through. I think we're going to see more stablecoin transactions dramatically ramp up. The SEC has provided more guidelines that are crypto friendly. I think just this week they're allowing or providing guidelines for banks and broker dealers to kind of execute crypto trading. So we're going to see broker dealers now offer crypto trading more than just somebody like a Robinhood, so the mainstream, if you will. So there's a lot of very positive legislative and regulatory developments also that I think could be really positive for crypto. So I would just tell everybody to hang on. And, if you're at a point where it's like, hey, I need a little more encouragement to hang on, maybe look at a option income ETF on the crypto side to give you a little bit of income along the way to maybe have a little less volatility. Doesn't necessarily have to be from Amplify. There's other versions out there, or you could do it yourself. You could sell options each week on your crypto. Now, I'll tell you, you probably rather pay 75 basis points of expense ratio than spend your time each week figuring out how to sell the options.
It's
But
frustrating.
certainly up to the individual, that's for sure.
Yeah, no, I think I'm on the same sentiment as you. I think 2026 will definitely be a bullish year. I think, as the administration said, I think $2,000 is going to be given to every person due to,
Oh, yeah.
tariff, distributions. I think
Yeah.
when that happens, I think every 18-year-old is just going to dump it into some form of crypto. I think there's going to be a lot of people now thinking, oh my gosh, I can do something with this. Just like when COVID hit and everybody had Robinhood, everyone had their phones in their hand and they just dumped everything that they had into the market. So now let's take a little pivot back into Solana. So what do you think is the most promising thing about Solana to hit mainstream? Is it its speed, its scalability? What makes Solana, or what does Solana need or need to advertise, and that will make it mainstream?
Yeah. I mean, if I was CEO of Solana, I would just try to push the speed and the efficiency of Solana relative to Ethereum. And obviously, Ethereum is undergoing some upgrades and improving. But, I think there's a variety of Ethereum users who maybe have seen, gas fees pretty high and some of the other kind of maybe less than ideal Ethereum dynamics. And, I think Solana has some advantages there from a technology standpoint, again, speed and efficiency. So I think, number one, that would be important. I think maybe just as important is just boosting the awareness of Solana. I really do believe, Solana is an up and comer and is, at least our experience in launching SOLM, we have had to do a lot of education about Solana. People were not familiar with it. They knew Bitcoin and they knew Ethereum, but Solana
And
is
I
a
think this
distant
video
third.
right here will definitely be part of the education process as
Yeah.
well, because I'm learning a lot just from this. I'm sure tons of people watching this are learning a lot. So no, much appreciated. Sorry to interrupt.
Oh yeah, no, no. So yeah, so I think education, it's like we went through the last bull cycle, and Ethereum and Bitcoin were kind of came into kind of the general awareness of the average investor, and Solana wasn't there at that point. So this next run, this next bull, and I don't, some people think, oh, this is the top for Bitcoin. I don't think it is. I don't think the 4-year cycle exists anymore. Yeah, so I think this next kind of mainstreaming of crypto is going to bring in Solana in a big way. So, and Solana's being smart. I mean, doing this deal with Western Union, I think, is a good thing. Not only to showcase their technology through Western Union, but money transfer, that business is huge, and getting the Solana name in front of people who are using Western Union, who later on may just use Solana itself, I think is a brilliant move. And of course, they're doing other things from a marketing standpoint. So it'll be interesting to watch how Ethereum and Solana compete against each other. I think they can coexist. And this will be a big year again for stablecoin and tokenization based demand for those utility coins, and really could potentially create a whole different catalyst, sort of like silver with industrial
Yeah.
demand, that would offset maybe their price movements relative to Bitcoin. So I think that's something we're going to keep a close eye on.
And I think when it comes to the Western Union deal, I think Western Union, they mentioned they had 100 million users. So that alone, that's a global, doesn't matter what country you're in, what city you're in. If you can access Western Union, you're pretty much touching the Solana ecosystem. And so do you foresee single crypto ETFs in the future, or do you think more of a multi crypto ETF, such as Bitcoin, Ethereum, Solana, and one ETF? What is the future outlook for these crypto ETFs for you?
Yeah, so for us, we're always trying to do something that, is kind of unique and people don't necessarily already have in the marketplace. So, we didn't do the spot crypto ETFs because, in some cases there's 12 or 13 of the exact same product from ETF sponsors. So instead we focused on these target distribution ETFs and then some max income. Granted, there are a couple other sponsors that offer max income. So really the differentiated product we offered was the targeted income. What's next for us? Yeah, I do think that, we are looking at multi-coin ETF ideas. And, there's exposure versions. So you could create a multi-coin ETF that is weighted by market cap, of which, Bitcoin and Ethereum and Solana would be, the majority of the holdings. You could also potentially get a portfolio manager who's trying to, rotate amongst those different cryptos to try to provide alpha. You could, go out and potentially, instead of owning the entire space, maybe you do something ex Bitcoin, because Bitcoin is around a 60 to 70%, I think, market cap weighting. So if you take away Bitcoin, there's a lot of interesting coins that you might be able to get to that then could have meaningful contributions to your return because they would be higher overall weights. We're certainly, looking at a variety of different, I guess, what I call alpha strategies that would be multi-coin. We're also looking at, multi-coin income because, maybe there are people out there who say, what, at the end of the day, Jacob, I don't know how much I want to buy from a Bitcoin, a Bitcoin covered call product, Ethereum, an XRP. How much do I allocate?
Just put
Or
it
what if
all in
there's just
together.
one? Yeah, exactly. So I think that makes a lot of sense. So there'll be a lot of evolutions, and I don't know how many crypto ETFs are here in the U.S. right now. I would guess probably 50 to 60, and my guess is next year we could see that 4x because again, some sponsors are just content to launch the sixth, Solana ETF or the 12th Bitcoin ETF. So we'll get some of that, and then I think we'll start to see some more kind of alpha-driven strategies, some actively managed strategies where you might be able to kind of have an expert manage either your income, crypto income portion of your portfolio, or just your capital appreciation portion of your portfolio. It's going to be a big year.
It will be. And just imagine one day that most of the stakers are just, investment firms. It's just,
Yeah.
everybody has like, 10 Solana ETFs, 10 Bitcoin ETFs. Everyone's just staking on the same thing. So you did mention that you guys are going to come out with stable coins and tokenization. Can you tell us more about that if you can?
Yeah, so we publicly filed to bring out two ETFs. One is a stablecoin. The name of it is Stablecoin Technology ETF, at least in the filing. We're not sure if that'll be the final name, but essentially it's an index-based ETF that would own about half of its portfolio in the cryptocurrencies that stable coins are being built on or built with. So when the easy ones you could think of would be Ethereum or Solana, but there's some other L2s. And then about half the portfolio would be equities that would either be companies that are creating stable coins. So, there's some pretty big companies like JP Morgan that are working on their own stable coin. Even Walmart's working on their stable coin, or there's other companies that are like digital asset treasury companies that are seeking to have, a Solana treasury or an Ethereum treasury. Bitminer, for example, Tom Lee's firm is, I think, the second largest digital asset treasury company and just owns Ethereum there. So that would be kind of the general investment thesis, that we would kind of employ in that ETF. And then the tokenization would be essentially the same type of recipe, about 50% of the portfolio in these cryptos that are being used for tokenization. So there would be some similar exposure, I think, between stablecoin and tokenization. Tokenization is a little bit less developed in terms of some of the coins in the market cap than stablecoin is. But that will evolve over time. There's a lot of L2s out there, specifically in tokenization, that I think have a lot of promise. And then we'll have these company equity exposure to companies that are on the cutting edge of tokenizing assets, using it as a competitive advantage, or maybe offering the service of tokenization to other companies through platforms, et cetera. So, we started this in 2018 with Block, the blockchain technology ETF. And, that's done well. As I mentioned, I think it's up 46% this year versus Bitcoin being down a couple percent. Blocks averaged 21% a year since 2018 average annual return. And we have that blockchain technology area covered. It has a little bit of a crypto exposure, about 10% in Bitcoin. The rest is in kind of blockchain and crypto stocks. We really wanted to build out kind of these other specialized areas in index format that also have a lot higher crypto allocation. So our blockchain technology ETF will hopefully be joined with stablecoin and tokenization as well. And we think those will be great tools for people to kind of easily buy a basket of these companies that is created based off a professional research group doing their research on what stocks, what cryptos, and kind of how to weight them. And then you can buy it easily in one ETF. So I think that'll take us to almost 10 crypto ETFs here at Amplify, which we're excited about, and really cover kind of the main areas right now in crypto. Of course, it's always evolving, and we're looking at other coins as well as other use cases or themes where we could launch some other product. But again, excited to kind of be out there and being one of the leaders. We just won an award for best crypto ETF provider about a month and a half
Nice.
ago. So that was cool. And I think it's great to get the award. I said to our company, we got to live up to it. We got to make sure that we fulfill that. And it's great when somebody as a third party recognizes you, but you really want to feel like you're making that difference. And I don't know if I feel like that if we are the best crypto ETF provider. It's hard to say that when you have iShares or even somebody like Bitwise doing a lot of these spot products. But again, spot's the easy stuff to do. I think some of these investment strategies that are a little bit more nuanced are a little bit harder, more sophisticated, and maybe there's more value we're bringing into the crypto ETF ecosystem by doing that. So maybe that's why we did win the award. We're just trying to continue to add value to investors, make things more convenient, and bring some kind of professional expertise that they're paying for with an expense ratio, but we want to make sure we earn it through kind of the results that we deliver in our ETFs.
Congratulations on the award. And I personally do agree that you are the best crypto ETF holder
Thank
out there,
you.
because just going to your website, I just love seeing how it's so user friendly. You see the top leaders, they're 1 month, year to date. Like it's just so simple to see, simple to use, and simple to understand the ETFs that you have. And I really love your crypto suite. I really do, because each one, not only do they give an income, but they have done amazing this year. Just from looking at it, most of them have at least done a minimum 10 to 15%. Some have done 30, some have done 50, 48%, amazing. And I think that's why I wanted to have you on so badly, because I really want to, hear more about the crypto stuff that Amplify has. And also the tokenization. I think that when it comes to tokenization, that is the future. I mean, I've heard so many people talk about even tokenizing real estate, tokenizing everything. And
Yeah.
at first I'm like, what does that mean? Does that mean everything
Yeah.
is just going to be on a digital file? But then once you get into it and start realizing that we already are kind of living in a tokenized world, just not in a digital tokenized world, it's just more of a digital conversion, I would say. So now when we're looking at crypto's long-term potential, do you think the price is already priced in for its long-term, or do you think there's a lot more room to grow? Like, as they say, Bitcoin to 1 million, Ethereum to 10,000. What are your thoughts on that?
Yeah, I think that it's not priced in. First of all, it can't be priced in because the majority of institutions and large investors have little to no exposure to crypto. It's just starting from that standpoint. So, maybe it's priced in yeah, there's no way it can be priced in because just of the limited access. And, again, we're spending most of our time talking to institutional ETF users. So these are financial advisors or institutions who are generally using ETFs for some or the majority of their portfolio. And we can tell you that those advisors are still trying to understand, in some cases, the difference between Bitcoin and blockchain. They do get the difference between Bitcoin and Ethereum, but they don't know many of the other type of coins and don't really know a lot more of the use cases other than maybe generically store of value or smart contract, kind of viewing like an Ethereum as like a software or something like that. So I would just say that group holds massive amounts of capital, and they haven't begun to, they've only begun in a very small way to allocate to these assets. And in a lot of these places, they've just been given the ability to even own Bitcoin. In many cases, Bitcoin ownership is limited to certain clients or maybe something less than 2 or 3% of a portfolio. So I think from a demand standpoint, we're, I don't know, maybe 20% of the way there. So that means who's that 20%? I think it's more retail and early adopter institutions. And even retail, I think, as we know, if you go to Thanksgiving or a holiday celebration, my guess is the majority of people that you run into at that celebration don't own crypto. They know about it, but they don't. So
Yeah.
I think, from a demand standpoint, we're nowhere near. And then I would say the second area, I would say from a utility standpoint, we're only starting to understand what the utility of outside of Bitcoin of these other coins will be. So whether that's decentralized finance, stable coins, tokenization, smart contracts, that is we're just scratching the surface. That's like 1 or 2% in. So when I hear prices of $1 million for Bitcoin or Ethereum at 10,000, I don't think I think those are very achievable over time. And I frankly, I think, the Ethereum and Solana prices have the biggest potential over the next couple years because of this utility aspect. And, if they start to become more on par with Bitcoin in terms of just awareness and education, I think we could see, Ethereum prices at $30,000. I really do. Because again, the more transactions that happen in stable coins, the more Ethereum price should go up and Solana should go up. And the more awareness that will generate, the more demand that happens. So I really see these as generational, opportunities. And when you think about it, Amplify, yeah, we managed a little over $16 billion. But we're deciding what our products are going to be, not unlike how an investor decides what they buy in their portfolio. We're trying to create a ecosystem of ETFs that we think not only are good investment opportunities, but will have very solid returns going into the future. So, we've been able to be at the forefront in many cases. We think that, leaning into some of these crypto value propositions, whether it's specific coins or it's use cases like stablecoin or tokenization, is going to be quite profitable for investors in terms of their total returns. And, when you're an ETF sponsor, when your investors win, you win. You make more money if they make more money. You make less money if they make less money. It's all about kind of that symbiotic relationship. So we think of ourselves kind of as a shareholder advocate, and we're trying to uncover these investment opportunities that will benefit the shareholders of Amplify ETFs and in turn allow us to grow as well. So I'm pretty excited to see where this is all going to go. And first 10 years will be in April, and we're a little over 16 billion. So we've had a pretty good start, starting from zero. Nobody gave us any money in our funds to start out. There's not a big institution that said we'll put $1 billion and let you start. We started out with zero, trying to go out and create a business and earn investors' trust. And about 10 years into it, we've been able to do that, and we're thankful for that trust. And we feel the weight of it in terms of making sure we produce what we say we're going to produce, but then also continuing to innovate on behalf of shareholders so that they can find new opportunities and that we can grow with them.
And honestly, this is why I love Amplify ETFs. The CEO and founder, Christian Magoon, always on point. And to the last point, I believe that there's so much more room for it to grow. I think Bitcoin in about 50 years might even be in the $5 to $10 million range. Who knows? Because the way AI is going, the way digital world is going, that could possibly be one of the main forms of not only currency, but with Ethereum and Solana behind it, the utility, the technology, the security, the safekeeping. And that's why, Christian, you have an amazing suite of ETFs, very unique, very income based, and I am so loving it. Thank you for the income. And so my audience members, I'm sure they are loving this interview as well, especially for those that are kind of on the fence with Solana, because you don't really hear people talking in depth about Solana. Of course, Bitcoin, Ethereum, but they kind of group Solana into the same category as Doji and all these other coins, which maybe they have a right to do that. But me personally, I think Solana is definitely the top 3 coins. And especially with the information that it has, the technology that it has now, Western Union bringing in its 100 million users, I think that its ceiling is not capped at all. I think there's tons of space for it to grow. And as you said earlier, I think Ethereum and Solana are going to be, the best of siblings. I don't think they should fight each other. I think they should work together. And I think it's going to be a very, very bright future for crypto. So audience members, just make sure that when you're dealing with crypto, when you're buying crypto, whether it's ETF, spots, or even the actual coin, make sure you do your own due diligence, because crypto is highly volatile. But if you can't handle the volatility, jump into something like SOLM, where you can just park your money, relax, and get a monthly distribution without having to worry about, oh no, we're down 10%. Oh no. Well, I mean, if you're down 10, buy more SOLM. But if you're, down anything else, crypto is very volatile. So please be very careful with crypto. This is just the beginning, just like the internet bubble. This is the beginning. Christian, now, before we end off the interview, is there any last mentions, any last things you want to throw out there to the digital world?
Well, hey, Jacob, I would say, one of the great things about your show is you always talk about the pros and the cons, and just going through the risks there shows that you care about your listeners and your audience. So kudos to you. There's always risk involved in investing, and you could lose all your money, right? In stocks and cryptos, et cetera. So do your own research, read the prospectus of any ETF you buy. If you're buying individual cryptos or stocks, make sure you read the white paper behind the cryptocurrency, or you read the actual financials of a company. So do your own homework. After all, it's all up to you. There's so many options that you can choose out there to invest. But I think you should continue to listen to Jacob, because he does highlight a variety of investments that may be appropriate from you, but you can only understand that and understand the risks. And I love the fact, Jacob, that you're not only talking about the pros, but also the cons. And I think being balanced in that is always very important. Kudos to you of being an advocate for your listeners, and appreciate the time today. It was great talking about so many topics, and I look forward to seeing you in 2026.
Thank you for the kind words, Christian. I just try to make it a very fair platform, even playing field for anybody who's on the fence. They can make their decision in a more balanced way. And definitely, Christian, you will definitely be on this channel again. We want to hear more ETFs coming out of Amplify. My audience is always requesting you. So, hey, who knows? Maybe early 2026. Let's see how the crypto world is going. Maybe some new things are popping up on your side, and we can definitely have you on again and kick it. So audience members, I'm going to have all of Amplify ETFs and Christian's information information in the description box below. Please check them out. Their website is very user-friendly. I totally enjoyed it. As soon as you hit the home button, you see exactly which ETFs are doing the best, what year to date, monthly, and everything. So it's very, very user-friendly. And remember, like and subscribe. And Christian, thank you for being here with me again. I know it's a busy time, but definitely we're going to talk to you again. So audience members, stay ranting.